Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's video, we are going to be diving into the concept of the United States debt limit, the potentiality of a United States U.S. debt default, and also whether or not this great nation of ours is going bankrupt. Very sad question to be asking on such a very important Memorial Day weekend. We are here today live for Coffee and Crypto Live, but the very first thing I want to do before we even get started is honor all of our fallen veterans who have died serving and fighting for this country. I just want to extend a massive thank you to any of the service members that may be watching this stream, any of the family members of anyone who has family that's been in the service, especially anyone who's lost anyone in the service. So just a big thank you to you from the Crypto Jebb channel. And I just want you guys to know right here before we even finish saying the intro, thank you for your sacrifice for this country. There's a proverb, I don't remember it off the top of my head, but it says something to the effect of that one of the greatest things a friend can do for another is to die for them. And so thank you very much to all of our fallen soldiers, and may your sacrifice not be in vain. May we not completely just forget what this weekend is about when we are celebrating Memorial Day weekend. I'm here doing the live stream this morning. We're going to be doing office hours tonight, but other than that, I'm pretty much taking the rest of the day off with my wife and children. We're probably there's a memorial, there's a Veterans Memorial Park here in town that we might go to, and just it has a brick for every, I think, 10,000 fallen soldiers in all the different wars, and it's just wild because you just do this. You're like, goodness gracious, this is like this day, every single day, but this land was bought with a price. It was a very steep price. So thank you to everybody who served. Today we're going to be talking about the United States going bankrupt. Is it going to go bankrupt on June 5th? You see, we've got something called the United States Treasury. The United States Treasury is essentially your mint account for your personal finance. It's the organization that tracks and handles all of the incoming and the outgoing expenditure. The United States Treasury does not partake in setting the budget. It does not say what we're going to spend money on or how we're going to raise that money. It's simply just more or less the accounting firm and the accounts receivable and accounts payable department of the United States massive federal corporation. Janet Yellen is the United States Treasury Secretary right now. She had originally said that if the United States debt ceiling was not raised by June 1st, which is just a couple of days from now, it's Thursday, then the United States will enter into default because some payments that need to be made on that day to the tune of about $100 billion, a lot of them being Veterans Affairs payments, will not be able to be made. June 2nd, there's about, I think, $25 billion going to Social Security. If we have not reached a debt ceiling agreement by that time, if House Speaker McCarthy and United States President Joe Biden have not reached an agreement by that time on raising the debt ceiling from 31.4 trillion, I wish it was 31.4 billion, 31.4 trillion higher, then the likelihood of the United States running out of cash and not being able to issue enough bonds to raise the cash to pay all those debts is very great. Janet Yellen's come out recently and said that we may be able to make it to June 5th, but essentially what's going on here is the topic of today's stream. I want to break down what the debt ceiling is, what it would mean if the debt ceiling was not raised, and why the United States is on the very precipice of going bankrupt. We're going to discuss all of that and more in today's episode of Coffee and Crypto Live, and we're also going to be looking at the impact that it's having on the charts and what it's having, the impact it's having on the United States stock market over on the Standard & Poor's 500. We're going to look at all of that together. Really excited to be here today. Thank you guys so very much. Let's go ahead and read some chat. We've got Bullish Bull. What's up, Bullish Bull? Said hello. Hi. Hi to you, my friend. We've got Dan Nolan in chat who said, run now. Eric is in chat, said morning. Joe B said morning. His boy Elroy said, remember those who have served. Absolutely, amen. Street Glider number 7 said morning. Cheaton Gaijinker. I only know how to pronounce that because Gaijin is the creator of War Thunder. So hopefully I pronounced that correctly. Joe Bollier. Bollier? I think it's Bollier. RC Moore, Dim Power said, Jebb, how are you? I am well. It is well with my soul. I love it when people ask me that question. It is well with my soul. Germany is in a recession right now. Who's next? Yes, Germany is up a creek without a paddle because they built their entire industry off of needing some very basic raw resource inputs that the Russian space provides them. And so now when that goes offline, Germany says, Wunderbar? No, quite the opposite. We've got Indisolana Le Red de los Secretos? La Red? Okay, this is weird because it's like two different languages. Red is rojo in Spanish. La Red de los Secretos is in chat. Hello. Crypto Bunny said, it's going to be bankrupt for sure. Been saying that for a few years. It's not if, but when may be imminent. That's right. We got Win Peoples in chat. We've got a Buckaroo in chat. Just Ray in chat. Freedom Advocate in chat. We need to start printing Monopoly money for real. Audrey Aiden Vish said morning. Eric Carter said, hey guys, what's going on? Hey guys, what's going on? Boom. I almost missed that was my own catchphrase there for a second. All right, so let's go ahead and talk a little bit about the debt ceiling. We're going to start off first by reviewing Bitcoin and crypto, but then we're going to talk a little bit about what the debt ceiling is. Right now, Bitcoin is surprisingly trading at $27,900. It's actually up quite substantially for reasons that we will discuss towards the end of this stream. I do believe I know why Bitcoin has rallied, and it's because there actually might be some hope on the horizon. We'll talk about that in a moment. It's up 2.68% over the last 24 hours, up 3.6% over the last 7 days, and up nearly 20% over the last 90 days. Ethereum is up 3.12%, up 4.53% over the last 7 days, and up 16% over the last 90 days, up 60% year to date. Bitcoin's up 67% year to date. We're very excited to see that Bitcoin has been doing so well. It's wonderful. All right, Bitcoin is currently trading at is currently sitting at $541 billion in market capitalization. That's how much money the United States government spends in about a month. Ethereum is currently trading at $228 billion market capitalization. There is a sitting theory from none other than Michael Saylor. He's like the guru of Bitcoin at this point. Everybody just kind of elected him king of the culture here in the crypto space, at least all the Bitcoin maxis have. And he's been talking recently about how it's very likely during the next bull market that much of the hype in the altcoin space is going to drain out right into Bitcoin. And Bitcoin's actually going to have a massive Bitcoin dominance run. That is very likely, in my opinion. Maybe not to the extent that he's saying. I think he might be a little bit sensational on that. I don't think he means to be. I think I just tend to disagree with him. I think the altcoins will still be in play. But he is probably right that we will see a run on Bitcoin dominance up to above 50%, if not even higher, moving into the next several months, probably the next 6 to 12 months, as Bitcoin approaches that all-important halving. Now, let's talk about the chart just briefly, and then we will jump on to this conversation about the United States debt ceiling, and then at the end, we'll tie back into what impact it's having on Bitcoin and the impact that it is going to have on Bitcoin. Right now, Bitcoin is actually moving to the upside. If you saw our premiere episode of what we call Up Next, that being our series where we talk about what's up next for Bitcoin and cryptocurrency, you can see that we gave it an 80% likelihood that Bitcoin was going to go into an uptrend, and we gave a potential entry for that uptrend right here around 27,750. Now, I want to add a caveat to what we talked about in that video, because there's one thing we didn't go over in that video that I think is going to play into effect right now. This rally has a lot to do with hope. This is a little bit of a hopium rally that we're going through right now. Yes, we've broken a downtrend. Yes, we've seen some bullish factors come into play. Yes, we've even seen a confirmed buy signal from Lux Algo come into play right now. All of this leads me to believe, yes, we're going into an uptrend. We're going to move on towards $30,000. The tricky bet here is that we are seeing this come into play because of hope of an agreement on the debt limit. So let's back up. Let's talk about the debt limit, and then we'll come back to whether or not that is a rally that is appropriate to be happening right now. Cool. For the last month, the United States citizenry has been eagerly watching Capitol Hill and McCarthy and U.S. President Joe Biden. We've got the Speaker of the House, Kevin McCarthy, and Joe Biden going back and forth and discussing this concept of the United States debt ceiling, the United States debt limit. So the United States debt limit has been raised over 78 times in the last 60 years. Essentially what this debt limit is, let's talk about it through a lens of personal finance. It's similar to a credit card limit. Let's say you have a credit card and you have a limit of $10,500. If you are living off of that credit card and you don't have much cash in the bank, but you're living off of that credit card and you're spending more money every month than you are taking in, let's say from a personal finance, because we talk about personal finance a lot on this channel, because that's really the point. I want to help you get your personal finances under control and using Bitcoin to do that. If you're looking at this through a personal finance lens, let's say you're making $10,000 a month, but you're spending $12,000 a month. You have a $10,000 credit limit. If you run that deficit for 5 months, then you are going to end up hitting that credit limit of $10,000. So you've got $10,000 a month coming in, $12,000 a month of expenditure. That's a $2,000 a month deficit. If you're running that completely being paid for off of a credit card, and you've got a $10,000 limit, 10,000 divided by 2 is 5 months. You've got 5 months before you hit that credit limit. When you hit that credit limit, you have 3 different options. Number 1, you can increase your income. That's kind of difficult. Number 2, you can cut your spending. That's also kind of difficult. Number 3, you can raise your debt limit. And so that's what the United States government is doing right now. Instead of just going full bore on increasing income or going full bore on cutting expenditure, there are factions on either side. The Democrats typically are much more inclined to increase spending. Don't get me wrong. The Republicans have done their fair share as well. And the Republicans have a camp that is fiscally conservative, at least somewhat. And so these fiscal conservatives that are not quite as fiscally conservative as they may have been in the past, but nevertheless, they are trying to get the budget under somewhat control. They have 2 different opinions. The Democrats want to increase income for the United States government. Right now, the United States revenues is around $4.5 trillion. They want to do that by increasing top-line tax income on the top 1%, or they want to increase a gas tax, whatever the kind of tax is. They want to increase taxes to increase income. The conservatives want to decrease the expenditure. So hopefully, in a modern democracy like the United States, that should shake itself out where there's compromise had and spending maybe comes down a little bit, tax revenue maybe goes up a little bit. The tricky thing is that the gap between the expenditure and the income is $1.5 trillion. The United States government spends $6 trillion a year. They bring in $4.5 trillion a year. So that means we are running a $1.5 trillion a year deficit. In fact, if we go to usdebtclock.com, this is a website that I've been frequenting since I was in 6th grade because I've been watching this number tick up, much to my chagrin and the chagrin of my fellow citizens, for over a decade. This website is great. Go to usdebtclock.org. I'm not affiliated with them anyway. I'm just a big fan of this. You can see the U.S. federal tax revenue is sitting at $4.6 trillion. United States federal spending is at $6.142 trillion. So that gives us a deficit, as you can see here, of nearly $1 trillion. The United States national debt is sitting at $31.813 trillion. The debt limit is sitting at about 31.4 trillion. So it's a little bit off here. There's a little something off. But you can even look at the U.S. debt time machine. Go back to 1980. In 1980, tax revenue was $500 billion. Expenditure was $550 billion. We were only running a $50 billion a year deficit. Think about that. How nice would it be to have a $50 billion a year deficit and have $887 billion in debt? Oh my gosh. I never thought I'd say how wonderful it would be to have only $887 billion in debt. Okay, so the trick here is that Congress and the presidency have to figure out, what are we going to do here? Are we going to reach some kind of compromise to raise the debt ceiling before we get to June 1st or June 5th. Janet Yellen has pushed it back to June 5th, said that she can probably make it by until June 5th. Basically, Janet Yellen is your wife over there, which, by the way, I wouldn't want to equate your wife with Janet Yellen, but they kind of have the same job. We're like, hey, honey, we don't have any more money. Like, I can try and make it work until Friday, but we're broke. I don't know what to tell you. We're flat broke. There's nothing I can do about it unless you do something. So that's the position that the government's in. The position of the government is in your position right now. Honey, do something about this because things are about to catch on fire if we don't fix this, because we're going to default. If the United States were to default on its debt, the United States would go through the first default that it has ever gone through in its entire history. Going through that default would crash the United States economy. It would potentially send the United States government into bankruptcy. And according to many different calculations, Moody's talked about this, Standard & Poor's talked about this, Vanguard's talked about this, there's a very high likelihood that the S&P would drop by over 45%, which would wipe out nearly $20 trillion in United States stock market shareholder value, while also resulting in 7 to 8 million jobs lost and a depression that would last for many years. That's what would happen if the United States entered into a default, even if that default only lasted for a few weeks, because of the shattered confidence that the United States people and the rest of the world would have in the United States economy. It would overnight remove the United States' position as the sole global superpower monetarily, because the United States dollar would be shaken to its core. Its trust in it would be shaken to its core in such a way that it would take decades to recover, if it ever would. This would be the beginning of the end of America's hegemony geopolitically, more than likely. So we don't want that to happen. Nobody wants that to happen. Is there going to be a concession reached? Likely. House Speaker McCarthy and Joe Biden had a call a couple of days ago, and they seemingly basically hashed something out. You see, the debt ceiling is used as more or less a political football by whoever is in charge of the House at the time, because it is a way that, and typically a lot of times it's a Democrat in office, and it's if there's a crisis like this, it's a Democrat in office, and then a fiscally conservative Republican House, and the fiscally conservative Republicans are saying, stop the spending, or we're not going to raise the debt ceiling. So they're, playing chicken with the United States economy. Nobody wants to be the guy that causes a head-on collision that destroys the economy. Kevin McCarthy, Joe Biden, neither one of them want to be the guy that goes down in history as having destroyed the United States economy. So both of them are forced into this tug of war where they have to try and find some kind of concession. Now, the reason that Bitcoin is rallying today and over the last 2 days is that we're getting closer to the wire, and it's starting to seem more and more likely that our deal has been reached. That is why Bitcoin is likely rallying here. As we get closer to the wire, the original deadline was June 1st, Janet Yellen said. That has now been extended to June 5th. That kind of tentative deadline gives just a few more days for the Congress and the White House to figure this out. The likelihood at this point is that they are going to, and they probably were always going to, but the likelihood at this point is that they definitely will. And so when we see Bitcoin rallying here, it is highly likely that this is being driven by this concept that we are finally going to see a concession being reached, and we're going to finally see some kind of deal. Now, I believe I actually have an article up here with some of the particulars. This is over on CNN. Normally I wouldn't go to CNN, but they have some just basic facts here. It's kind of hard to skew this. CNN says this, here's what's in the debt ceiling deal. So this is kind of a tentative deal. This came out yesterday. This is pretty up to date. Address the debt ceiling. The agreement would suspend the debt limit through January 1st, 2025. This removes it as a potential issue for the 2024 presidential election. My hunch is that the Republicans want the debt ceiling to not be an issue until after the next election, because they think that a Republican might actually beat Joe Biden. That's probably why that's there. Caps non-defense spending. Under the deal, non-defense spending would remain relatively flat in fiscal 2024 and increase by 1% in fiscal 2025 after certain adjustments and appropriations were made, according to the White House official. The adjustments including shifting $20 billion, and this is something you're really going to like. I like this part of the deal. The adjustments include shifting $20 billion in IRS funding to other non-defense areas and rescinding $30 billion in unobligated C-19 relief funding. So one of the big things that the Republicans are interested in doing is rescinding an $80 billion funding that was given to the IRS, that the IRS is basically just using to hire an army of like 20 or 30,000 new agents. That there's headlines all over the place like IRS agents with pistols are going to be walking around the streets of Houston trying to hunt down and audit people and hunt down people that haven't paid their taxes. So obviously the Republicans, independents, pretty much nobody likes that. And so it's pretty interesting that that's in that deal. the reason that they were given all that money is because, in theory, if the IRS has more enforcement, then they can raise more taxes, and then that would mean that we can raise taxes, tax revenue, even without increasing taxes because of increased compliance. But what you end up doing is you end up creating a police state if you give that much power to the IRS. They've got plenty of power as it is. There's more things in here having to do with work requirements, veterans care, etc. This is the one I was talking about. The agreement would cancel the total fiscal year 2023 staffing funding request that the House GOP says would go to new IRS agents, according to the fact sheet. House Representatives have determined to jettison the roughly $80 billion in IRS funding contained in the Inflation Reduction Act that Democrats passed last year. The GOP lawmakers argue that the money will be used to hire an army of new agents to audit Americans, which is what's happening. But the agency says it would also be used to support operations, modernize customer service technology, and assist taxpayers. That's probably also happening. Let's be fair here. They're probably not just using it to hire their own private army, although some of that definitely seems to be happening. So a deal seems to be getting reached, and the reason that that's important for us today is because it seems to be one of the major driving factors of the Bitcoin rally that we're undergoing right now. Bitcoin has rallied quite substantially over the last 2 days as this news has started to break of a deal being reached. And in doing so, Bitcoin has broken above this downtrending level of resistance right here, and it's reestablished the downtrending level of resistance right here. As you can see, we've broken above one downtrending resistance level. Now we're kind of below another one. I'd still like to see some more confirmation before we move to the upside. I would also like to see this agreement actually pass Congress, and when it does, that very well may lead to Bitcoin going into a rally, which is what we talked about. We gave it an 80% likelihood on Saturday's video that we would go through a rally, and we predicted that Bitcoin would end up rallying all the way up to 29.5, if not even higher. I do believe that is started. If you were interested in getting in that trade, then you would. If you saw that video, then you'd be in the trade right now. You'd be up, like 1% maybe. There's still a lot more room to go, but I do believe that Bitcoin is going to continue rallying here because I think an agreement will be reached, and after that agreement is reached, I think that Bitcoin will be able to move to the upside even faster because there will be there will be less uncertainty. There will be more concrete. There will be more stability in the United States economy. Now, the other reason that Bitcoin's moving to the upside is because the stock market is moving to the upside. The United States stock market rallied all the way up to 420.72 over here. U.S. dollars on the SPDR S&P 500 ETF Trust. Moved all the way up to $420. We're currently sitting right at $420. Again, we're right below critical resistance that the United States stock market has not been above since last August. Moving above these levels, above $420, would likely lead the stock market into a rally. As you can see, we've had an uptrend on U.S. stocks for quite some time, and that uptrend is one that is likely to continue moving into the rest of this year if we're able to see stagnant inflation or declining inflation down below 5%, and if we are able to see an agreement reached on this, and also, of course, if we see a plateauing of the United States effective federal funds rate, which I believe is still being predicted to be a pause by CME Group. We can check that really quickly, but I do believe they're still predicting. Actually, that's interesting. They changed it over the weekend. So this is what I was kind of saying. I wasn't so sure they were going to pause rates like CME was saying. CME has actually moved to, because we're currently right here. Yes, they've actually moved to predicting more than likely we'll have another basis point rate hike. That's interesting. If you guys remember, I've been saying for, well, pretty much ever since the rate hike came out, and then we saw the inflation data come out May 10th, that we were probably going to see one more rate hike because inflation is getting really sticky at 5%. A bit of a different conversation, but it's still relevant to what we're talking about with Bitcoin, and it's still relevant to what we're talking about with the SPY. The United States the United States Consumer Price Index inflation and United States core inflation are both getting to be very sticky, right around 4 to 5%, especially right there around that 5% region. One of the major things that's bringing that down is the energy sector. One of the major things that's bringing CPI up is the food sector. Those two things are pretty volatile. They're kind of balancing each other out. Core inflation right now sitting around around 5%, I believe. Let's go to bls.gov/CPI. It's been sitting right here around the exact same level, 5.5%, excuse me. It's been sitting right here around the exact same level for quite some time. And this is very important because core inflation, major categories over here is great. Core inflation is not moving. Core inflation has not been moving. And that's very concerning because energy and food are very volatile. They're very subject to market conditions. They're very subject to weather. They're very subject to geopolitical shifts. Major categories right here is really the core, and it's stuck at 5.5%. When the United States Federal Reserve is looking to get inflation under control, they're not just trying to get all categories under control. They're also trying to get major categories under control. It's absolutely possible, and this is, like I said, I've been telling you guys this for a while. I wasn't always very confident in what CME Group was saying here. The United States effective federal funds rate right now is at 5.15%. It's likely going to go to 5.3, and I would not be at all surprised if they sent it to 5.65% and plateaued it there. They'll probably do at least one more hike at this point. We were hoping for a pause, but at this point, it's more than likely we'll see at least one more hike. And then we're probably also going to see a pause either at the next meeting or the meeting thereafter. So July 26th or September 20th would be the dates to be looking out for. I think that they will pause below 6. I don't think they're going to go above 6 at this point just because they're trying to get inflation under control. And what Jerome Powell is realizing is that inflation right now is not being driven by the interest rates. The interest rates are not the only thing getting it under control, and the printing of the money is not the only thing that's driving the inflation. A lot of this inflation is a lot more sticky for other reasons in the economy, having to do with the commercial real estate, having to do with the rise of China, and having to do with the Russian-Ukrainian war, having to do with the United States having to be increasingly independent from a petrochemical standpoint, and having to do with the overall recovery from the pandemic that happened in 2020 and 2021. It's very likely that inflation is going to be a lot more sticky than many economists predicted. A lot of people predicted that it would get down to 2% relatively easily. That's not necessarily going to be the case. Inflation is going to be a lot more sticky because the economy is nowhere near as healthy as it was 10 years ago. And also, we've got this runaway debt going on with the United States government that eventually one day will have to be paid back or defaulted on somehow. How will that happen? I don't know. Is the United States government going to go bankrupt? Eventually, if we continue down this path, right here, where we are, let's see, that's not what I was looking for. If we continue down this path where we have $1.5 trillion a year in deficit, and we've got $31.8 trillion in national debt, yes, one day the United States economy will have to go into bankruptcy and default. But by the way, here you go. Check this out. This is the budgetary estimates compared. People are predicting different budgets. Office of Management and Budget, Congressional Budget Office, U.S. debt clock at current rates are predicting a national debt nearly $40 trillion, if not higher, and a United States deficit of over $1.5 trillion. The debt clock themselves, based on current rates, are predicting in 2027, on this day in 2027, just 4 short years from now, that we will be looking at a $9 trillion U.S. federal budget, U.S. federal spending, and we'll be looking at over a $2 trillion budgetary deficit. It's a very scary thing that we're talking about here. The United States cannot continue doing this forever. It could continue doing this for the next 30 years, maybe. But I remember myself when I was in, well, here, let's check the date. I remember myself when I was in middle school. It was, let's just go back to 2012. 2012, you know, back in the day, we had Gangnam Style and all these different things going on. I remember back here when the United States debt was at $15 trillion. Since I graduated middle school, the United States debt has doubled. Now, luckily, the United States federal deficit has not actually grown all that much. Still sitting right here around $1.2 trillion. Now it's sitting around 1.5. It's not much better. But at the end of the day, this debt is something that is absolutely untenable. So, is the United States going bankrupt? One day, if we don't do something about it, potentially. Is it going to happen this week? More than likely not. A concession is likely going to be reached by House Speaker McCarthy and by President Joe Biden. And if that does occur, then that will, of course, send stocks to the upside because, oh, now the uncertainty of the United States defaulting on its debt is going to disappear. And now the United States has a little bit more stability. We've kicked the can down the road for another 2 years. This is really a dumb argument. And the reason it's a dumb argument is because we're the only... So there's two different arguments here. One is that we need to pass about, like, the two extremes here are that we need to get rid of the debt ceiling. It was imposed in 1917. There's a long story behind it. We need to get rid of the debt ceiling, spend as much money as we want. Or two, we need to pass a balanced budget amendment. Both of those are very large extremes. I am personally, and I'll just go ahead and tell you because I stand for financial sovereignty and I'd like our nation to be an example of it. I'm sorry. Let me just get off my soapbox real quick. I am personally totally in favor for some kind of balanced budget amendment. That being said, You can't do that overnight. There are a lot of people that want to just, boom, pass that and say, $1.5 trillion in spending, figure it out. Great, figure it out. Yes, we need to do that while also not just pulling the rug out from under families that are used to Social Security payments or veteran affairs payment or whatever. There's got to be some kind of transition into that. That being said, it would be my dream to see our beautiful great nation in a surplus where it's profiting every single year and where we're not running debt. In fact, I would love to see the United States government not be in debt at all. Yes, you heard me right. I would love to see the United States government not in debt at all. It has been in that position before, and the United States government can get back there. The trick is that the United States government needs a dose of financial sovereignty. The United States government is being run by its money rather than using its money as a tool for the betterment of of its own citizens. And so when the United States government operates in that way, it is teaching the United States citizens that it's okay to be financially unsovereign. So when we have millions and millions and millions of United States citizens walking around and they are not sovereign in their finances, they're doing it being led by a government that is leading by example. The government is not our parent, even though they want to act like it. But in one way, they kind of are. My 2-year-old and my 7-week-old look at me and their mother as an example. The government is not our parent, but a lot of people look at the government as their example. And what a terrible example it is financially. What a horrible, horrible, horrible financial example the United States government is. That's why I think it's so important to go back to sound money principles and to go back to what we have learned from the Word about money. Where we learn that debt it can be a useful tool, but we just have to keep in mind that whoever is holding debt is a slave to the person that is the debt holder. That being said, the person that is that is in debt is in bondage towards the person that holds the debt because they have leverage. The United States government right now has all kinds of people that have leverage over it. Now, none of them will use it because the United States government has the biggest military on the planet. But that's not a very strong position to be in this much debt. It's just not. It's not a sovereign position. And especially as the most powerful country on the planet, it would be very becoming of the United States to be sovereign financially. If there's any nation on planet Earth that could do it, it is us. Let me say that again. If there is any nation on planet Earth that is rich enough to be financially sovereign, it is the United States. What other nation can bring in $4.5 trillion a year and still not be financially sovereign? There's not one. Not even close. Not even close. And so not only is the United States, by doing this, leading a terrible example for our own citizenry, it's also leading a terrible example for the rest of the world, which follows the United States. The United States government is the model of how to do finance on a governmental level. And it's a terrible model of how to do finance on a governmental level. So I just want to encourage you guys, when you see this kind of behavior from your lawmakers and from your politicians, understand that this is completely untenable and it is sending the wrong message to you and to your children. This is not something that you want to emulate. You do not want to emulate being $248,000 in debt for every single taxpayer. Let me ask you a question. How long would it take you to pay $250,000 in taxes at your current rate? Hopefully, it would take you your entire lifetime. It would probably take you at least 10 to 20 years to get this debt under control. Something needs to happen, and it needs to happen dramatically, and it needs to happen soon. All right, let's go ahead and read some chat. How will this impact Bitcoin and crypto? It's likely going to lead to a rally after we see a concession, after we see a deal reached. And when we do see that deal reached, then there will likely be a jump in the stock market, which will likely lead to a jump in the Bitcoin market, and then Bitcoin's going to be very good for right now. The government is slowly replacing the role of parents. It's trying. Definitely not good, but it is trying. $4.5 trillion in tax revenue a year, but debt is $31 trillion and growing. Yep. Yes, indeed. Let's see. Stimmy checks were expensive. How many people still have theirs? Yeah. Yep. Let's see. Defund the IRS. Yeah, for real. Let's see. Crypto Mini Bike in chat said, good morning, everybody. Good morning to you, Crypto Mini Bike. Good morning. Maui Tall said, let's go, Gainesville. Let's go. My hometown. Love it. Drill, baby, drill. Yeah, everybody thinks just drilling more oil will help. I mean, it probably would help. I'm all for energy independence. Jebb, there has been ways to, let's see, ways to cut the dead air in the beginning of the video. It gets me every time. Yes, I know. I need to do something about that. Air could actually happen in the 2011 debt ceiling. Yes, there was a kind of like a limited pause on some expenses at the time. They kind of staved off an actual default. But yes, if anybody doesn't remember that, you know, like the post office shutdown and all that kind of stuff. La Red is Spanish for the internet. Really? I did not know that. Huh. Freeing up 10 trillion gallons of liquid natural gas right now as Russian pipes are turned off. Interesting. Need to start printing monopoly money. Yep. There is no love greater than this when a man lay down his life for his friends. Oh, excuse me. Yes, that is the verse I was trying to think of. Thank you, Freedom Advocate. Thank you very much. Happy Whit Monday and Memorial Day. Not sure what Whit Monday is, but happy Memorial Day, absolutely. Going for a long from 27.8 to 28.650. What do you think? I think there's a lot of potential there. I think there's a lot of potential there, especially considering what we just saw happen with the Lux Algo buy signal. By the way, guys, if you have not gotten Lux Algo, you should. Let me show you why. Lux Algo has done a great job of calling all of the last major movements on Bitcoin. It's done a wonderful job of helping to predict those. You can see this buy signal right here led to this massive rally. This buy signal right here led to this rally. This buy signal right here led to this rally. This sell signal right here led to this major correction. And we've also just seen a buy signal. So if you want to see more about Lux Algo, make sure to subscribe to the channel because I talk about it quite frequently. But also make sure, if you have not already, to sign up for Lux Algo, because you can find the link in the description box down below. Use coupon code Jebb, Jebb30 for 30% off at checkout. Use that and the annual plan, and you will save $472 over the first year. Very exciting stuff. All right, let's read some more chat here. You should have a countdown timer for your live streams. It reaches more people in the algo that way. Yes, there's a lot of things I want to do with the streams. There's a lot of things I want to do with the videos too. Drill and drill more and sell for more and sell or sell for more oil, farming commodities and industrial capacity. I'm always for growing the economy. Our debt is fake. Kind of. Except much of that debt is in the form of treasuries, and those treasuries have to be paid back. Surprisingly enough, those treasuries are actually considered to be some of the most stable assets in the entire global economy. The question is, how well will they actually survive if we go through a default? The United States defaults on its loans. Like I said, between 6 and 8 million jobs will likely be lost within the first month. It costs the economy, it's been estimated at $250 billion in a month, by the way. That's not over like 2 years, that's over a month. And it would also, of course, forever shake the confidence in U.S. treasuries because, well, there's a default in the past. It's like looking onto somebody's credit report and saying, oh, they had a bankruptcy. That's not great. Except there's not a 7-year restart for the United States economy. There's just, it's there forever. Good deal. Smash the like button. Yes, absolutely. Thank you, guys. U.S. healthcare workers don't get any checks, but we have to. But we have to pay. Yeah, right. Get ready for the truth, folks. It's going to be nuts. I'm not sure what truth you're talking about, but our debt is fake. Get ready for the truth, folks. It's going to be nuts. Interesting. Jebb, please check out the bull market support band. Easy moving average to read. Very significant when finding bull markets. I can look into that. I can do that. It was 87,000 new IRS agents. Wow, that's wild. Yeah, when you've got $80 billion to play with, I suppose you can do a lot of. I suppose you can do a lot with that, can't you? I suppose you can do a lot with that, can't you? All right, guys. One of the last things I want to talk about here is where Bitcoin goes next. I do believe that Bitcoin is going to be going into a new rally if. This is the if, because there's always an if we're talking about technical analysis. If the stock market is able to break above this critical resistance at $420. I do think that Bitcoin will be in good position. And you can even see here that we've been under a buy signal on Lux Algo on the stocks for a while. This buy signal came into play right here. The United States stock market responded with a 5.28% rally. The Lux Algo indicator has done a great job here. I think that it will continue to do a great job here. And so just keep in mind, Lux Algo is doing a phenomenal job with these rallies. Boom, 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 boom. You can see this buy signal came into play here. We went into a major rally. Had this sell signal right here, went into a major correction. Buy signal rallies, sell signal correction. Has done a great job of predicting what the stock market is going to do, not just what the Bitcoin market is going to do. There's a lot of value in Lux Algo, so make sure to check it out. And also, guys, keep in mind that that Lux Algo has given us a buy signal right here and confirmed it on the daily chart. Whether this will continue or not is yet to be determined. But also keep in mind, there's a buy signal that's come into play on MACD. MACD has crossed bullish in quite a substantial way, and so that's pretty exciting. Bitcoin has also seen a rally on the RSI up above the 50 level, and the other thing to keep in mind is that there is bullish RSI divergence. We've got lower lows forming right here on the bottoms of the price action charts. We've got higher lows forming right here on the RSI. All of these things have come together in just the last few days to indicate that a rally has come. Now the question is whether or not that rally will be able to remain in place. I think it will probably, as a result of the agreement on the debt ceiling being reached relatively soon. And also keep in mind, guys, that there is a meeting coming up on June 14th for the United States effective federal funds rate decision. That could rain on the parade. At this point, it's possible that Bitcoin rallies up to just below 30. We see that decision come in and Bitcoin corrects, and then we start rallying again. That would kind of line up with what we've shown over on, where is my chart? I don't know if I have the chart. That is sort of what's shown up here on this chart here, where I talk about how Bitcoin is likely going to go through a rally in the bottom half of this major trading channel over the course of the rest of this year, moving back up towards 30 and on into the $40,000 territory. Quite excited to see what's going to come next on Bitcoin. And if you want to see what's going to come next on Bitcoin, make sure to hit that like button and subscribe to the channel for more cryptocurrency content here on the Crypto Jebb YouTube channel. All right, let's go ahead and read some chat. Epidemic outrage said, lots of crazy people out there, Jebb. That is true. Let's see. Now refers to internet, but original meaning is net, like fishing net. Oh, I see. That's interesting. Gustavo del Toro said, yes, but no internet in middle-aged Spain. That's true. That's what I was confused by. Clout Casino said, federal agents need a warrant and never talk to them, film all interactions, and force them to mail you any correspondence for future court records. IRS always mails you a bill first. If you ignore that bill for too long, then that can trigger worse problems. Gotcha. That's good to know. That is good for people to know. All right, guys, any final questions before we wrap it out? Go ahead and let me know, and make sure to tune in tonight for office hours. I'm really excited to bring you guys office hours tonight because we've been recording and uploading office hours, and I think you guys have been really enjoying having that. Make sure to, if you're in the Club DeFi's Principles of Technical Analysis Discord server, make sure to go and check out office hours. You can find the recordings over there in the hashtag office hours channel. Let's see here. Yes, guys, I just encourage you to share this with people. I encourage you to share this debt clock with people. Let's take a look at the state debt clocks here for kicks and giggles. We'll take a look at Florida. Florida here has $138 billion in debt. You can see that the state of Florida itself is in debt by quite a lot. Debt to GDP ratio is 10%. It's a lot better than the United States' debt to GDP ratio. The United States' debt to GDP ratio is much higher. I think it's right here. It's sitting at 120%. Sitting at 120%. We have 120% more debt than we do our entire gross domestic product of the entire nation. It's absolutely terrible. You see, state debt is sitting only at $1.2 trillion. It's not anywhere near as bad as it could be. You can see over here, total state revenue. I believe there's a part down here that shows total state expenses. Not sure if it is or not. You can see US GDP sitting at $26.4 trillion, continuing to rally, of course, continuing to go up, of course. All right, let's go ahead and just read chat here for the last minute or so, and then we will wrap it out, and we will say sayonara and have a happy Memorial Day, everybody. And don't forget why it is there, what it is all about. Mails you a bill until you show up as a whistleblower against the Democratic Party. Who's clicking the hearts with me? Well, we spend. Yes, for real. That's exactly how that goes. All right, guys. So in summary, what is the United States debt ceiling? The United States debt ceiling is basically the credit limit on the credit card that the United States has been using to pay all of its bills and all of its obligations over the last 100 years. And so whenever the United States gets to this point where it's run out of money, then essentially the solution is not to cut expenses, which is what it should be. The United States' solution is to just raise the credit card limit so that we don't default, so that we don't go over our limit. We don't have very much, we have a very poor credit utilization ratio. The United States not raising its debt limit would result in the United States defaulting on its debt. And if it defaulted on its debt, that would destroy its credit rating and would destroy confidence in U.S. treasuries and in the United States economy and government as a whole, and would likely destroy the global economy and lead us into a massive depression. If all of that were to occur, that would be apocalyptic scenarios for the financial sector and for the financial world. Hopefully, that's not going to happen, and more than likely, that will not happen. I don't think it will. What we're looking at now is that there's a concession that may be coming between House Speaker McCarthy and between Joe Biden, which will lead to concessions on both parties, and then they will, of course, be able to raise the debt ceiling probably to about $35 trillion and kick the can down the road again until late 2025, suspending the debt ceiling until that point, until after the presidential elections. If there is not a decision reached, it will crash the stock market, and it will be very, very, very bad for the average American. With that debt ceiling with that agreement being reached, which it most likely will be, that will likely lead to a short-term rally in Bitcoin and cryptocurrency because the uncertainty over whether or not we're going to see a massive crash in the United States economy will be starting to disappear. All right, guys, I hope you did enjoy today's video. I hope you did enjoy all of the analysis that we did. Make sure to sign up for Lux Algo if you have not already, and stay tuned for more content here on the Crypto Jebb YouTube channel. We're going to go ahead and wrap it out, but before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.